Good Friday, traders. Today is Friday, September 27th. It's another time to review our portfolio and talk about our strategies and answer your questions. You can see on your screen our total portfolio. We add this week a couple of trades. It's let me see. We add D2 yesterday and C2 ladder at the beginning of the week. So we're in good shape. Portfolio is slightly positive delta, approximately 7, and have pretty good theta, 444 right now. Total profit right now about 3,300 plus. That's middle of the day of Friday, and looks like we make from this ES portfolio approximately $500 per week. Is it good or bad? Well, it's we're definitely expecting more from our strategists. I think that for portfolio size like this, we should expect approximately about $1,000 per week. But why we did just 500? Let's talk about that. First of all, how I already mentioned before, the first months of our trading this strategy, we had to be very conservative and open conservative way our ladder, if you remember. Now, finally, we start adding new series of our ladder much more aggressively with positive theta and good credit, approximately 10 points. Uh, why we didn't do it before? Because we have to build first sufficient hedges of our ladder. Now we're in good shape with our hedges, and it's time to start to be a little bit more aggressive. The second reason, it's our delta hedges. Let me show you how it's performed during last month. Uh, just a second. Now it's D6, D5, D4, D, B, C, and it should be another B, and it should be A. So this is how our total delta hedges, 4 of them, look like now. You can see that we're pretty protective, but uh, we opened them approximately the same time during the same months, and it's probably the worst case scenario for our delta hedges because market went up and didn't give us chance to reduce cost of that hedges. Right now, our hedges has a loss approximately 1,500. So if we add that loss to our total profit, our latter strategy is pretty good. My point is that we way overhedged with delta hedges, and we did it in purpose. We didn't have much choice. First of all, months ago, market was very unstable, and second, again, we had to build this sufficient protection for our future trades. So we did 4 delta hedges. For ladder size, which we use right now with 2 naked puts, I think that 2 delta hedges will be more than enough in the future. But right now we use 4, and what we're gonna do with them? Well, if you see on the graph, we don't need to do anything because it's virtually lost everything which he could lose and it's not much left, but our hedges an average about 9 months till expiration. So it will protect us pretty well as a protect for crash protection. But at the same time, it's nothing much left to lose. So we don't need to do anything. Even I don't recommend to roll long puts right now because uh, we we're not gonna get much from this. But at the same time, if we do it, we will reduce property of our hedges, so it will be much softer. So, my opinion, we should hold it, but when it starts expiring in the future, with this size of ladder, we're probably gonna use just two delta hedges altogether. Uh, so again, we lost for 1500. If we can assume that we're gonna use half of that, so we can easy to add that $700 to our profitability, and it will be not bad. Plus, again, our ladder strategy will be much more aggressive. So I expect that in the future we will do as we expected, approximately from about 3, maybe 4% per month profit. Let's talk about our oil. We did the adjustment a couple of days ago, and we did it the worst possible time again. So right day before it was crushed again. You can see it was approximately in 72 area. Now it's dropped back to 67. Uh, but our position is not bad. Right now it shows that small loss about $80. So by the way, if somebody didn't start that trade with us, it's a good time probably to join. It's pretty safe and a good trade. I expecting sooner or later we will make our $1,000 from it. We're pretty well protected up to 56 area, which I don't believe oil gonna drop there. So, but if it's continue to drop, we're definitely gonna add something and adjust it again and make that tent much wider and lower. So this is how our oil look like. I don't know if you like it or not, but I think it is a good trade. Uh, Now I would like to answer a couple of questions. Looks like the only question was about what we're gonna do when markets start dropping down. What we should do in which uh, what we're gonna do first, second, and so on. So first of all, we're not going to touch our ladder until our short naked puts will reach delta 20. If it happened, we will definitely roll it down. Preferably, we're going to roll it the same expiration. But sometimes it's not possible because it will be extremely expensive. I personally wouldn't like to pay more than 10 points debit for my roll from Delta 20 to Delta 10. If it will be more than $10, I will look for another expiration 1 or 2 weeks away to do it a little bit less expensive. When we do that roll and spend, let's say, 10 points debit, we have to get that 10 points somewhere because we have already a bunch of hedges, including hedges, vertical hedges, which is part of our ladder strategy. They have different strikes, different time till expiration. So which one to choose first? I recommend to choose that one which have the highest profit. Why? Because if others don't have enough profit, it means that they still have much higher potential if market continue to go down. So if you don't have enough that spreads, probably the best solution just to roll longs of our spreads down. But if you have enough of them, let's say three, four, five, much better just to close one of them. Choose that one which the most profitable and close it. So we still have lots of spreads left. And if market move down will continue or even accelerate, we will step by step close another one and roll again. And don't touch yet our delta hedges. Delta hedges will start uh, perform and give us very big profit when market drop at least 10%. So we're gonna hold them. And again, if you remember our uh, our strategy, delta hedge strategy, as soon as it's get $1,000 profit, we will roll down our longs and add another one. This is how we're gonna build a cascade of delta hedges when market moving down. About Vega hedges, we don't touch them until our IVs or VIX will shoot up to 50 areas. So when it will be extremely profitable, at that time, probably during night session, you should start cashing them and use that cash to roll your problematic short puts. This is how I do it. This is how I recommend to do you all these adjustments, and we will be safe. Thank you very much, guys. I don't see much questions here, which I already didn't answer in previous videos. So we're gonna finish today. Have a nice weekend, and I hope that starting from next week, because we start opening our second series of our ladder strategy, it will be much more profitable. Plus, our violins start performing well. We're also gonna add probably another one in a couple of weeks. So I hope everything you will be happy. Thank you and bye bye.